Hi guys, welcome back to Father and Son Investing. Today we're going to talk about an instrument for saving or getting some higher yield that you may not be aware of, and it's called your sweep account. Many of you are going to have a sweep account at your brokerage firm or potentially at a bank. And those sweep accounts actually can rival the actual yields right now for a treasury bill, or a high yield savings account oftentimes will beat a high yield savings account. Also rival a CD or a brokered CD. So in this video, I'm going to talk about what is a sweep account. We'll talk about how it works. I'm going to talk about the history a little bit of sweep accounts. And then we're going to talk about my sweep account at Vanguard. I'll show you how that's working. And I'll give you a little bit of the risks of a sweep account. In the next video that I do, I'm going to show you some of the brokerage firms who are ripping you off when it comes to your sweep account. So let's get started. What is a sweep account? Well, it's a special type of account that can be linked to your bank account or a brokerage account. Those accounts are designed to maximize your funds. They are designed to take money that is not being used and put it into a higher bearing interest account so that you're making the most on your money. Now, a very common way for a sweep account to be used is as a money market fund or a money market deposit account. Now, in this video, I'm not going to talk about banking sweep accounts. Those are available, but I'm not going to touch on that. We're talking about the brokerage sweep accounts here. The goal is the same. You're going to take uninvested cash and start investing that in some way to get you a higher yield. So sweep accounts, let's just talk about them. What are they used to hold? New deposits. When you take money out of your bank account and stick it into your brokerage account, you can put it into your sweep account. Dividends. When you receive dividends on your securities or bonds, that sweep account will hold your dividends. Proceeds from sales of your securities, that goes into your sweep account. And funds in excess of a target brokerage account balance can go into your sweep account. So what is the benefit of using a sweep account? Well, without it, your cash may be just sitting in your brokerage account earning nothing. So if you're like me and you have a fair amount of cash just hanging around waiting for the market to go down a little bit, or you're just investing that cash in other items like treasury bills, I certainly have done that in my brokerage account as well, your sweep account may be an alternative. So let me just give you an example of what a sweep account is. I mentioned I have Vanguard VFMXX is the Vanguard Federal Money Market Fund. That's what I use for my sweep account at Vanguard. You can get some quick information from this page here at Vanguard. First of all, you'll see that it's a money market fund. That's an important distinction here. This is not an FDIC insured savings account. This is an investment account. It is very low risk. We can see on the scale of 1 to 5 that it is a 1 in terms of risk. What does this fund invest in? We'll go to the product summary to get that answer. We'll see that the fund invests at least 99.5% of its total assets in cash, U.S. government securities, and or repurchase agreements that are collateralized solely by U.S. government securities. This is dealing with very safe investments. Nothing is absolutely perfect, absolutely safe, but when you're coming to U.S. government securities, that is considered the gold standard there. Now, the fund is designed to not lose money for you, but that is always a possibility. We'll talk about that in risks. But the idea is to always keep the NAV price, the net asset value, at $1. So your $1 is always worth $1. Before we move on to how this actually works in the real world, let's just get some other information about this account. You'll notice that it does have an expense ratio at 0.11%. That is very low as expense ratios go. You'll notice that it has a 7-day SEC yield of 4.55%. If we go further down to performance data here, the year-to-date return so far as of March 21st, 2023 is almost 1%. That is a compound yield of 4.65%. Let's just get a real-world example of how this is working. I've pulled up my brokerage account at Vanguard, and I've sorted already on 1 year. I've also clicked on dividend, sweep in, and sweep out, so we can get some idea of how this sweep account is working. We'll see that the dividends that go into my brokerage account land in my sweep account. They actually go right back out because they're getting reinvested as well. Nevertheless, you'll see a few things here. First of all, there's a recurring deposit into my sweep account that is coming from the VA. Actually, I'm a retired Air Force officer, and they gave me a little bit of money each month. I go ahead and put that into my brokerage account. We'll also see that there is a dividend that comes from the Vanguard Federal Money Market Fund. I'm going to go ahead and sort here, and we'll go on down to Vanguard Federal Money Market Fund, and there it is, a dividend that was paid on February 28th of $41.50. Let's go ahead and look a little closer at that dividend that comes from VFMXX. I've gone ahead and gotten rid of the sweep in and sweep out amounts. It's just showing the dividends that I get now. And we'll see here, Vanguard Money Market Fund, the latest dividend was $41.50. And if you look here at the last few, you'll see that it's gone from $23.67 back in October up to $41.50. Of course, interest rates have been rising. And so the yield on this Vanguard Federal Money Market Fund has also been going up as well. Now, this is cash that I'm not actively using for investing at the moment, and it's earning about 4.5%. That's doing better, actually, than my regular investments at the moment. Now, not every brokerage out there, though, is offering you this kind of rate, and that's going to be the subject of the next video that I do. Who is ripping you off? Speaking of those rising yields, you can get a nice better picture of that on the Vanguard website to see just how well these distribution yields have been going up. If we look back at June of last year, it was 0.61%. You can see it steadily climbing up to the current around 4.5% there on February 28th. Now let's just talk about the risks of managing your money this way. As I mentioned earlier, this is not an FDIC insured account. You need to understand that, not insured by the FDIC. Now, the fund is designed to keep your investment at $1 per share. They actually do a very good job of that. You can look on the Vanguard website. You'll see that it varies between about 99 cents and $1. Let's talk about risk. They quote 3 of them here. They talk about income risk. What is that? That's the chance that the fund's income will decline because of falling interest rates. Because the fund's income is based on short-term interest rates, which can fluctuate over short periods of time. Essentially, your interest rate may go down. Well, that makes sense. If interest rates are going down, the yield on this is also going to go down. If you're relying on this for income, you need to understand that, because in the future, you may not be getting this same type of return. Manager risk. You need to understand that there is a manager of this fund, and should they select their securities poorly, you may underperform the relevant benchmarks or other funds with a similar investment objective. Easy enough to understand, if the manager performs poorly, your funds may not return as much as other funds. Lastly, you need to know that there is some credit risk here. Now, they're investing in very, very, very secure funds, but remember, nothing is absolutely secure. There is the chance that the issuer of a security will fail to pay interest or principal in a timely manner, or that negative perceptions of the issuer's ability to make such payment will cause the price of that security to decline, in which case the value of your VFMXX could also decline. Overall, at least at the moment right now, using a sweep account, a money market fund, in my case at Vanguard, depends on what your brokerage wants to use. Using a sweep account can be a way to get a very good return on your money while you're waiting to invest it. Or you can also just hold it there in case you want to use it as a short-term savings vehicle. Now, in the next video, I'm going to talk with you about some brokerage firms who are ripping you off because they're not paying anywhere near 4.55%. I hope this information was helpful for you. If it was, give us a thumbs up, and we'd love to have you as a subscriber. And share this kind of information with a young person in your life. Help them get bigger returns on their uninvested cash. Until next time, enjoy your investing.